Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Another very important cue that you're getting is from the precious metal space. While, of course, the gold and silver prices are trading at a one-month lows, what also has been moving quite significantly is the fact that the platinum and the palladium prices have hit parity for the first time in 16 years. This has happened because you have seen the platinum demand go down and the prices have climbed down as well. But the palladium demand, because of the hybrid vehicles and electrification, etc., all that talk has taken the palladium prices on the higher side. And that's the reason, that's the reaction you have seen come in from both of those PGM metals there. But trading strategies, and we have Navneet Damani joining us for that. Navneet, hi, good to have you. Let's start with the precious metal space first and the kind of pressure that we are seeing in gold and silver. Are you buying these lows or do you see further decline?
Well, good morning, Manisha. Yeah, we've been witnessing some selling pressure over the last couple of days. Prices have been pretty broadly in a range of 29,400 to 30,100 over the last few days. But now geopolitical tensions have started to fade, and yesterday's tax reform has led to the much needed sell-off. So dollar index has been bouncing around. It looks like the strategy could be sell for another couple of sessions, and I would like to sell around 29,700 with stops over 29,850, targeting 29,400 or below levels on the downside.
Also, Navneet, how are you looking at the crude oil prices now? Because we almost did 60 for the Brent and 53 for US crude oil prices, and since then it has been a bit of a slide down. Would you call it a correction, profit-taking, good buying opportunity?
Well, yeah, that could be called as a good buying opportunity. We've seen prices holding well above $51, $52, which was a much needed technical breakout. The market has not seen these levels for the entire year now. Also, the inventories which is coming in for the last couple of weeks have been very choppy, and OPEC has had 100% compliance in the last report that mentioned. So it looks like buyers could be positive on the upside. Probably 55 could be in store. So we'd like to buy around 3390, targeting 3460, 3500 on the upside.
Navneet, slightly longer term view as well. What's your sense on the prices now? Because various reports are now pointing at 55, 58 for US crude, 65 perhaps as a spike into the Brent crude prices also. Are you going with a bullish view for a long term for this one?
So talking about a 3 to 6 months perspective, in my sense, crude will be broadly range bound. 55 to 58 on the higher side could be the maximum cap, and on the downside probably 45, 46 could be the range. So prices could be in the $20 range. We've seen that compliance has been largely followed by the OPEC as well as non-OPEC members to a large extent, and the inventory rig count have started to fade off now. So the range could be range 56, 58 on the upside and probably 46 on the downside.
Okay. All right, Manisha as well as Navneet, thanks very much for joining in and taking us through all of those strategies. Well, important flash coming in, where crucial meeting in Finance Ministry today to discuss economic issues. So that will be a story which we will be tracking very closely.
Become also rans, etc. So I don't think she's getting 1600. The better view is to get into a better company and a better stock, and at some point that will move up 40%. So I think given the situation with the rupee, being with a good exporter is probably the right idea. So try to buy into a Motherson, and out there, if global economy etc. is recovering, chances of making money are much better.
Okay, look at IRB. I mean, I think what, 5 minutes back, not even 5 minutes back, IRB was up some 4% or so. It's up 8.5. You know, it's a big move, a big correction, of course, as well earlier, and now it's coming up and being bid up, all in the last 5 minutes. I mean, I think 5% odd gains in the last 5 minutes on IRB. Sharp spike. We'll get to more stocks there, but we have one more query. This is from Divya, who has 100 shares of REC purchased at 216. Who says that in spite of all the rural electrification push, the stock price is falling. What do you advise? Ashwini, what would you tell Divya?
Well, you know, if rural electrification could take stocks higher, you know, we should have been a lot higher on REC. See, this is the typical worst kind of NBFC, government-owned, investing in infrastructure, people don't pay them back, etc. You want to get into a Bajaj Finance, Bajaj Finserv, where their borrowers are better and they are better run companies. So I would right now get into the best NBFCs, don't even think of the second rung ones. So L&T Finance, another similar price range type of stock. Get into better stocks because all stocks have fallen, but better stocks will probably do better over a period of time.
Next month, I think for the next quarter or so, possibly we could see the Nifty being range bound, while individual stocks could continue to do either well or poorly depending upon the valuations.
What's your sector allocation currently?
We were underweight on the IT sector. We've moved that into the neutral territory. We have taken off some of the overweight that we had on the auto sector. We do remain overweight on the consumer sector and select stocks in the pharma space and the capital goods space.
Okay, fair enough, Mr. Bhatt. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the fundamental view coming in on the markets. Up next, as we promised, we will be talking to Sudeep Anand, the analyst of IDBI Capital Markets and Securities.
Sudeep, thanks very much. Good morning. First of all, very simply put, what is the reason, the predominant reason for the correction we've seen recently in these stocks?
Yeah, good morning. See, if you look at the global market, equity your crude oil prices have gone up by around $2 per barrel over the last 7 to 10 trading sessions, while your petrol and diesel prices remained almost stagnant. So there is no major price hike happened over the last 3 to 4 days or 5 days. So that is the reason actually your marketing margin for these companies are actually contracting, and that is actually actually raising the concern whether this company will have to bear the losses or what. So until we get the clarity, probably we may see some kind of pressure on all marketing companies. At the same time, actually our view is that we are preferring upstream over downstream, and we prefer ONGC over the all marketing companies as of now.
So this basically the fact that crude oil prices have gone up, but prices at the pump have not been increased. This is raising fears that maybe there is price control. I mean, unsaid, not directed, but is there nevertheless.
Yeah, that's correct.
Okay.
But we believe that over the next 2 to 3 days, if your crude oil price...
Yeah, go on.
Yeah. Yeah, so because if you see your crude oil price had made a high of around $59 Brent, is now again has come down. So over the next few days, if it again comes down as your supply side scenario improves in US and crude oil price again comes back to 55, 56, then it would be a favorable pricing for all marketing companies.
But this fortnightly change, right? I mean, how much compared to the Indian basket, how much should prices have gone up? In the period we're talking about, the 2-week period that we're talking about, what was the mismatch according to you, if you've calculated that?
So roughly our calculation says that with every dollar increase in your crude oil price, your petrol and diesel prices should go up by around 25 to 30 paise per liter.
Sudeep, the ONGC HPCL transaction is probably going to be completed by the end of this year. What is the maths that you've done on it, and will it change your view on ONGC at all?
So Ekta, it all depends at what valuation actually ONGC buys out the government stake of HPCL if it happens. There is no clarity on the pricing front, and until we get the clarity on that, probably it will be very difficult to assess the impact. But looking at the fundamental side, we are quite positive because your gas price is likely to go up from 1st of October by around 15 to 17%. That is our expectation. And even the gas volume for ONGC is going up. So these all things are coming on a positive side for ONGC. So we like ONGC at this point.
Is it just purely a valuation sort of mismatch for now? But will you be happy owning it for a long period of time? I understand the valuation. I mean, it's trading at, I think, 1-time book or maybe even less than 1-time book. But is it just that? So that gets corrected and then you get out, or you'd be happy owning it for a while?
So actually, we'll have to also look at what structurally changes happens after the merger, whether there would be a significant change in your management and ONGC takes control, which is unlikely, and whatever we are hearing, there should not be any other major changes other than your change of equity. So if that happens, then we don't see any major risk to ONGC as of now.
Okay, fair enough, Sudeep. We're going to let you go on that note. Thanks very much for joining in and speaking with us. Well, we need to wrap up the show, but as we do that, let's leave you with some opinion from Lawrence Vilanco of CLSA. Earlier today, he spoke to us. He believes that the Nifty at 97.10 presents a good buying opportunity.